Hey everybody, it's Spencer Hakimian and welcome back to another episode of What's Moving Your Money. For this episode, we are going to be talking about Lisa Cook and all the drama to finish out the week tomorrow. Then we're going to talk about Nvidia's earnings, the positive, the negative, and everything that's in between. And finally, we're going to do a brief preview of tomorrow's PCE report because it is showing an alarming trend of core prices going up. So stay tuned, sit back tight, and I hope you enjoy. So today we got big news in that Lisa Cook is countersuing President Trump on a personal basis and that she wants to stay on the Federal Reserve during this appeals process. Now, the Federal Reserve has said they will defer to whatever the courts say. If the courts rule that she did something illegal as it related to her secondary mortgage, then the Federal Reserve will advise that she no longer participates on the board. If the courts find that she did not do anything worthy of being fired, then the Federal Reserve will keep her on the board. And if you go back to our previous episode, we spoke about the risks of Powell doing that. I also made a short TikTok and Instagram post today about this very specific risk. So you should go there and check it out as well. Now, tomorrow we are going to get the first legal hearing in front of a judge in the Lisa Cook case. It will be pivotal to see how the courts respond. Not only because the Fed said they will listen to whatever the courts say, but beyond that, it is because if Trump is able to fire Lisa Cook off the Federal Reserve for this, you can bet there are going to be many more lawsuits coming in the future against other Federal Reserve members that are not willing to toe the president's line. Everyone on that board, if you go looking deep enough, you will likely find a minor infraction. Everyone is human. Everyone has made mistakes, minor mistakes, intentionally, unintentionally in their lifetime. If you chase someone with the police car down a highway, eventually they will slip and you can pull them over. It is the same philosophy here. So it will be very interesting to see what the judge rules, not just in terms of the actual ruling, but for the precedent that it sets for Trump in these remaining 3.5 years. And then every president beyond that will use this precedence if it is afforded to them. So it's going to be very interesting and we are going to cover it extensively. Now, let's also talk about Nvidia's earnings report that came out yesterday. It was very interesting. They missed for the second quarter on revenue. It came in lighter than expected, largely due to the fact that they were not able to book as much China revenue as the street had expected. But at the same time, Nvidia gave bullish guidance relative to what the street expected for the upcoming third quarter. So that was seen as quite interesting. Immediately, the stock fell 5% yesterday in trading, but now it recovered about 4% and it is only down roughly 1% since yesterday's earnings. Now look, one thing you have to always consider with a massive name like Nvidia, especially an expensive name like Nvidia, you have to consider the implied volatility that was expected before the earnings came out relative to what actually happened. You know, credible street like investment banks like Goldman Sachs, Morgan Stanley estimated that you can get up to a 10% move in Nvidia stock up or down based on the earnings report. So believe it or not, we are 24 hours later and it's only down 1%. Actually implies it was not such a significant move. And these misses were minor relative to what Wall Street had expected. If they hadn't given that guidance that was bullish, then it would be a very different story because right now, Wall Street would have been freaking out over their missed earnings, their lost China revenue stream, and how expensive they've bid this company up that has now lost one of its main growth prospects, which is selling chips to China. So I think Nvidia played it well. They were able to avoid what could have been a very messy and bad press release by giving that guidance. But now they have to obviously match that guidance. If you begin missing quarter after quarter on revenue, eventually Wall Street will stop being lenient and you will get punished in the form of lower stock prices and lower multiples if that were to happen. So that's something we will be tracking on this podcast very closely over the next 90 days. So I hope you guys stay for that as well. Now, let's also just get into inflation before we wrap up this episode. Tomorrow, we have PCE data that is coming out, the personal consumption expenditure data. More important to me, to be frank, is going to be the core PCE data, because that is what the Federal Reserve uses to determine whether it should cut interest rates or not. And look, the trend with core PCE is just not pretty. Every month it is getting worse. And tomorrow, when the report comes out, it is estimated to come in at 2.9% versus 2.8% just a month ago. And yes, 10 basis points is not a big deal. But once you start snowballing multiple 10, 20, 30 basis point increases month over month on top of one another, that's how you eventually get to an environment of 4, 5% inflation. And that is what you definitely want to avoid. It is all about the trend line. It is not just about the actual number. The trend here is going in a wrong direction. By the way, if and when the Federal Reserve starts cutting, do you think that's going to add fuel to the fire, or do you think that's going to make it less prone? Obviously, it will add fuel to the fire. So we just keep stacking new things on top of one another that are inflationary. Tariffs, tax cuts, massive budget deficits, rate cuts now. Every ingredient is there to get inflation pushing to the upside. What will make it not go to the upside? It really remains to be seen. Another thing that is inflationary is we have stopped so much immigration into our country, and the workforce is likely shrinking right now, which means that the remaining workers can demand more wages, more income increases, more control over their employers. And that also is inflationary. Wage growth is good if it is real wage growth. Wage growth is actually bad if it is simply nominal wage growth. And wage growth is the worst if wage growth is happening and it's still below the pace of inflation, because you're going to be cutting into profits but also not even giving your consumers and your employees enough money to continue spending. That would be the worst of both worlds. So we will monitor all of this closely. It is all coming out tomorrow. It is a busy August Friday. Labor Day is around the corner. We're getting right back into the swing of it. And I want you guys to stick around. August is going to be a busy month. August is historically the toughest month for equities, and we're going to be tracking it all here on this podcast. So thank you again, and I appreciate that you guys watch.